driving growth.
Well, thank you. You know, one of the things I'd like to say just before going over to Michael, and this Michael, and then we'll have this Michael, all right? But one of the things I'd like to say is, in the old days, when you announced really good results in this country, the stock market went up. And that's the way it should be. And we're going back to that. Because otherwise you can never really attain true greatness. In other words, GDP at 4. Oh, 4 is so high. Let's raise interest rates and kill it. And we're going to go back to the old days. When we announce great results, it doesn't mean we're going to raise interest rates and try and kill it. It means that instead of 4% GDP or 3%, which I said so wonderful, 3%, it should be able to be 20 or 25%. I don't know why it can't be. You shouldn't kill it. And so we hope that if this country announces great results, because you're going to see great results over the next couple of years, all these plants, and I'm not just talking about AI, we have the biggest number of auto plants planned. Toyota just announced $10 billion in plants built, various couple of locations, few locations in the country, just a little while ago. They're all coming here. They're coming here because of tariffs, because they don't want to pay tariffs, but they're coming here because of the election and the mindset. But when we announce good results, the market should go up. Now it's when you announce good results, Michael, the market goes down because they say, oh, that means things are good. That means we're going to kill it by raising interest rates. I think it's really wrong. It should be the opposite of what it is now. It should be the way it used to be. We announce good results, the market should go up, and we should keep driving it up and have it keep going up and let it be much, much bigger, much, much better. And, you know, growth doesn't mean inflation. They're always afraid that, oh, we have, and if there is inflation, that's okay, then we can slow it down. But we should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a you know, deadhead Fed hair. I mean, this guy, the head of the Federal Reserve is a stiff. And, you know, you fight that. It's amazing. We fight that, and yet interest rates are going down, except with him, not too much. He did a rather, I would say, a rather small number that could have been doubled, at least doubled. And that's the other thing. I think the rates for the United States are always the lowest in the world, because without us, there is no world. Without this economy, there's no world. You know, you could go to some of these wonderful countries that you think are so great. Well, one of the reasons they're great is because we allowed them to get rich off of us. We didn't charge them anything. You look at some of the deals, I don't want to say, use Switzerland as an example, but Switzerland paid almost nothing in terms of a tariff or a tax or whatever you want to call it, license. They paid nothing, and you know, they're paying now. They're paying a fair amount. I had them at 39%, but I decided to be nice. I was nice, and I think they like us a little bit better. But the money you're talking about is enormous. Our country is a very rich country. But if we do well, the market should go up and the value of our country should go up. And if we do poorly, the market then should go down. It shouldn't be the opposite. And if we go up, we should encourage it to go up more. And those numbers, when you say, you know, 3% of GDP or 4% of GDP, they should be much higher. So, you know, I've wanted to say it. I do say it. I believe it. And we have to get a mindset that when a country is doing well, you don't want to kill the growth. That's what they're doing. They kill the growth. I don't know if you guys even agree with that. They kill the growth because they're so afraid of inflation. But you can have tremendous growth without inflation. Everything goes up with the growth. But that's not inflation. So I think we can do much better than traditional numbers. And you see that. You see that with what we're doing. We're leading in everything. And now, and remember this, as far as prices are concerned, and they talk about affordability, I inherited the worst inflation in the history of our country. They say it was 48 years, but I say it was the history. What difference? It's 48 years, they were telling me. They said I was being inaccurate because I said the history. I think 48 years is a long time, but it's actually, I disagree. I think it's the history. So in the Biden administration, I inherited the worst inflation in the history of our country, or 48 years. And prices were very, very high. I brought the prices down. We had yesterday 3 states where oil was at $1.99